Okay, so we've got some major news going on in the institutional gold market. The CME Group, which is a section of NYMEX, they've moved in to start clearing forward contracts on the London LBMA market, basically with the forwards. And this is very interesting because the LBMA, it moves about 20 billion dollars a day of physical gold bullion. Now the CME's major shareholders, you can see we got here, usual suspects like Barclays, Goldman Sachs, etc. Now, how this works is you've got this institution called the London Precious Metals Clearing Limited, and they're made up of the big banks: Barclays, Deutsche Bank, HSBC, J.P. Morgan, Scotia, Makota, and UBS. And so what they're doing is they'll clear these gold forward contracts, and they actually clear them into unallocated accounts. And so they say unallocated accounts do not entail specific bars. Unallocated accounts are the most convenient and commonly used method of holding gold and silver. The owner is an unsecured creditor of the clearing member. Okay, so we need to go and look at page 13 of the FAQ here. So we've got the CME Group facts for cleared OTC forwards, and under 13, what exchange rules will govern? All disputes are governed by the COMEX. Now, why is this important? Well, you go and look at COMEX rule 104.36. This is a February 18th memo from the Office of the Secretary at the CFTC. And what she said here is that it will accept gold-backed ETF shares as the physical commodity component of exchange for futures physical transactions involving COMEX gold futures contracts. Now, what's really important about that is if we go and look at the GLD prospectus, we move down here to page 11, and it reads, gold bullion allocated in the trust may not meet the London Good Delivery Standards. This is neither the trustee nor the custodian independently confirms the fineness of the gold allocated to the trust in connection with the creation of a basket. So they don't even verify whether there's actual real gold in there or whether it's just like a lead bar painted gold. I mean, it's ridiculous. And then on top of that, we go and look at the SEC's 10K. And on page 18, we come and look under the trustee's role here on page 18. And what we find is that in addition, the trustee has no rights to visit the premises of any sub-custodian for the purposes of examining the trust's gold or records maintained there. And no sub-custodian is obligated to cooperate in any review. So, even if they do have physical gold, the trustee doesn't even have the right to visit the premise and conduct an audit to make sure that there's actual physical gold there. I mean, it's absolutely ridiculous. And so I wrote a couple articles on this back in December and followed it up where I talked about this audit. And in July, David Einhorn of Greenlight Capital wrote something very interesting in his letter to shareholders. He said, we made a couple of modest changes to our macro hedges. First, after extensive investigation, we switched our entire GLD exchange-traded fund position into physical gold. Now, this is like a $6 billion hedge fund, and the top holding was GLD. We're talking billions of dollars. At a minimum, this will provide some savings as the cost of storing gold are less than the fees on GLD. It also gives David's desk a lot more bling. Actually, it is being held at a professional storage facility. I mean, what do you look for with a professional storage facility? Well, I like Gold Money. There's a Gold Money user agreement, and you come down here into section 8, 8E, where you provide your delivery instructions, and at any time, see that at any time you can take physical delivery. So I mean, that's the standard right there. Physical delivery at any time, and I think that's what David Einhorn had in mind when he moved to this professional storage facility. And so what we've got is we've got the London Precious Metals Clearing Limited, which is clearing these spot and forward transactions for the CME, with the CME on London good delivery bars, and they're doing it under COMEX rules where you can deliver ETF shares, which don't even have to be physical gold. So it's just a bunch of paper gold that's being used to satiate physical gold bullion demand, and it's just crazy. Okay, so we have here $1. That's the silver dollar right there, and that's what a dollar is defined in the Constitution. Then we've got a Federal Reserve note dollar. Now, obviously, this is more real than this in the sense that it's physical silver bullion. Now, these used to be money substitutes where you could exchange them for a $1, which was 371.25 grains of fine silver. But we got rid of that in 1968, and we went off the gold standard back in 1933 and 1971, respectively. So the Federal Reserve Note dollar is no longer good to be redeemed in the physical bullion. So we've created these interesting money substitutes, which are COMEX warehouse receipts, or a lot of people think GLD ETFs. And as I've gone over, the GLD ETFs are redeemable for COMEX delivery futures. Exchange of futures contracts for physical delivery, you can use GLD ETF shares, which is kind of crazy. And so really what we're seeing is, let's say I've got one dingleberry. Dingleberry, you like that? And this dingleberry, the exchange rate's 1 ounce of gold for each dingleberry. Well, which would you rather have? The physical gold right here, or the dingleberry, which you can then trade for the gold? Well, obviously this is safer and more liquid, which is why David Einhorn has exchanged all of his dingleberries or his GLD ETF shares for the physical bullion. Now, what gets really interesting about this is, let's say you've got a COMEX receipt for 1 ounce of gold. Well, which would you rather have? The 1 ounce of gold or the COMEX receipt for 1 ounce of gold? Well, there we have another example of, you've got counterparty risk and credit risk, because what if the COMEX is running a giant scam and there's a loss of confidence in the scam? It's found out to be a con. Well, then these become absolutely worthless, and it's people who've got the physical bullion that maintain their purchasing power. And so that's what we're seeing is with this gold price suppression scheme, is that it's getting very difficult to deliver the physical bullion in these large amounts, where people like David Einhorn are exchanging their dingleberries or their COMEX receipts in exchange for the physical bullion. And I think that that's what we're seeing with this change to the OTC forwards is being cleared now through the CME, is we're seeing the next stage of this gold price suppression scheme. So keep your eyes open in case there are any failure to delivers, because it's going to be a lot harder to get this physical bullion.